Hey guys, it's Alessio, hope you're well. In this video, I want to take another look at the chart of the major markets, and I want to explain to you why I think the technical picture on the chart of the major stock markets has got even worse than last week. And also guys, I want to share with you what the Google trend search is showing to us, but what people out there are thinking about the major markets. It's quite interesting because there's one particular phrase that is coming up a lot in the Google trend searches. And the third thing I want to talk about is what my plan is for the next few months. What I'm planning to do myself in the next few months, if it's correct that we're entering a bear market. All right guys, join me. Alright guys, welcome back. And by the way, a happy Halloween to you as well. I'm making this video in the south of England, by the coast in the town of Torquay. Beautiful place, by the way. I'm here in this hotel. Very rainy day. So I thought, you know what? While it's raining out there, I'll make a quick video for you about the major markets. Alright guys, now you may recall in my video last week, I think it was the 21st of October, I mentioned that a bear market has been confirmed in the major stock markets. Alright guys, so I mentioned several reasons why a bear market is likely triggered in the major markets. For example, a break of the trend line. 2, the Dow Transportation Index, a major leading indicator for the markets, which is plummeting. 3, a Dow theory bear market was triggered. 4, the weekly charts showed that the stock market was rejected from its 21 weekly moving average, which in the past, this has been a very bearish factor for the markets. And by the way, guys, I repeated this warning of a potential bear market many times in my videos last week. All right, guys, now when I published that video, I noticed a lot of the comments on my video were saying, no, this doesn't look like a bear market. The stock market, the S&P, has not broken its trend line. And a lot of people were skeptical about that. So I understand that. And by the way, guys, let me say this. I realize some of you are watching my video for the first time are probably thinking this is clickbait. You might be thinking this video is like one of those many thousands of other videos on YouTube which have been saying crash, bear market for the last 12 months. As I'm sure you know, in the past year, there's been a trend of a lot of YouTube videos just talking about crash, bear market, doomsday all the time. And as you know, for the past 10 months, I've been doing the opposite. In fact, I've been saying I'm bullish on the markets, which was right as the market rallied to much higher targets before this recent drop. Now here's the thing, I don't enjoy making these kind of videos, you know, these kind of bearish style videos talking about a crash or a potential bear market, because what I'm saying goes against everything I've been saying for the past 10 months. So as you know, I don't make these videos talking about a potential bear market unless I'm absolutely serious about what I'm saying. So here's what's happened. Since last week, about 9 or 10 days ago, the stock market has drifted much lower. In fact, we can see clearly the S&P has drifted and dropped further lower below its trend line that it broke. Same thing, by the way, happened with the Dow Transportation Index. Now, I know some of you probably think, who cares about the Dow Transportation Index? Because, guys, as I'm sure you know, the Dow Transportation is a key leading indicator for the stock market. When this chart is dropping like it has recently, it's usually a warning of something much more serious people don't even know about. So because transportation is very sensitive to shifts in the economy, when this chart is dropping like it has recently, again, it's making me very concerned. It's a big warning that something is not right in the markets and the economy. It's also a warning that the stock markets could be starting a major bear market, like we said last week. And by the way, guys, the S&P has dropped to our downside targets that I talked about in my previous members video. Here's a very short clip. We'll come back. My next target, I think, could be reached quite soon. 4,180, 4,150. These blue lines and the green lines. And the next level at 4,100 at the 1618 extension. So I think we could be heading down into this region soon. That is my higher probability target and expectation. All right, guys, as you heard in my members video about a week ago, I warned that the stock market could drop into several key levels. And by the way, guys, on Friday last week, we dropped very close to that 4,100 target that I had. Anyway, guys, because the stock market, the S&P, and the Dow Transportation Index have dropped further lower into deeper support levels. And by the way, guys, the Dow Transportation Index has now dropped below 14,100, the June lows, which is a key support level I had in the previous video. Because we've broken that level as well, again, this has further increased the probability that we're likely in a bear market. Not just any bear market, but the start of a bear market that could be worse, if not equal, to the 2008 bear market crash. Now listen, I know some of you are skeptical, and that's okay. Even my friend Charlie Burton is quite skeptical about a potential bear market. But as far as I'm concerned, the further drops we've seen on the weekly chart and the daily chart of the stock markets, especially on both the S&P and the Dow Transportation Index, has increased the likelihood that we're now at the beginning of a protracted and long-term bear market, as long as we stay below the highs of October. So the highs of October are resistance. All right, guys, so as long as we stay below that, I think the odds of a bear market have increased. It's only if the market was able to get above the October highs that I would change my mind and become bullish again. But I have to say to you, I think that's unlikely. So what is my plan going forward? If it's true, we're in a bear market. I'll come to that in a few seconds. All right, guys, there's one more thing I need to show you before I tell you what my plan is for the next several months. First of all, take a look at this data from Google Trend Searches. Now, it seems that a lot of people out there are searching on Google for this specific phrase, stock market correction, or what is a stock market correction? So this phrase, stock market correction, is trending a lot on Google. Now, you have to ask yourself this question: why is that phrase, again, trending on Google? It could be that a lot of people out there think this drop in the stock market is just a correction, or it could be they watched the news, they heard some analysts say this word stock market correction, and they wanted to know what it meant. But I think what it tells us is that the general public out there and most analysts think this drop in the stock market is just a correction. And as I'm sure you know, a correction is not the same thing as a bear market, because a bear market suggests something much more longer term, a downtrend to much lower levels, whereas a correction suggests a temporary drop before we go to much higher levels towards all-time highs. So if people and analysts out there are expecting this drop in the stock market to be just a correction, that means they're still long-term bullish. They're still looking for much higher levels towards all-time highs. That is the opposite of a bear market. Now, I don't know about you, but that has me worried and concerned. That means they're not taking the possibility or the probability of a bear market seriously. And I think that's a mistake. Listen, they could be right. Maybe everybody else is right. Maybe the analysts out there are right. This is just a correction. But personally, based on what I'm seeing on the chart, what I explained to you in this video, no, I don't think so. I think the odds of a bear market have greatly increased. And as long as the stock market remains below its October highs, then I think we are in a bear market. Now, here's one more thing I need to mention to you. Here's my plan for the next several weeks and months. So there's a pattern out there, as I'm sure you've heard of it before, called the Halloween effect. The Halloween effect simply says that after Halloween, after October 31st, usually in the month of November, but it could be December as well, there's usually a bounce. There's a statistical bounce or rally in the markets, usually from Halloween onwards. Again, we don't know when this bounce or rally could happen. But, and here's the important thing, if it's correct that we're in a bear market, that means the next bounce or rally in the market is likely to fail and drop back down again into a continued downtrend and bear market. That is what I think is more likely. That is what I'm expecting. So I think the people out there who think this drop in the last several months is just a correction, I think they'll be disappointed. And I think they'll probably find out the next rally in the stock market is more likely to fail and drop down again into a continued bear market, assuming we stay below the October highs. Now, if that's correct, and if it's likely for the next bounce to fail and then continue the bear market, then my plan for the next several months from November to December is to short the next rally. And by the way, guys, just to let you know, last week, about 7 to 10 days ago, I closed half of my long positions. I had already taken some gains. I locked in some gains back in the summer. But my plan for the next several weeks and months from November to December is, assuming we get a bounce or a rally in the Halloween effect, then I'm going to be adding to my short position. I'm looking to short that rally or bounce with a stop loss. By the way, guys, this video is by no means a recommendation to short or sell into the markets or buy into the markets. This video is purely for educational purposes, and I'm not saying you should do the same thing as I'm doing. I'm only letting you know what I'm going to be doing, and the reason I'm planning to short the market, assuming we get a bounce, is purely as a protection for risk management purposes, because the future is uncertain, and if I'm right we're in a bear market, as the charts seem to show, then I want to have some protection against a potential downtrend or bear market with a stop loss in case I'm wrong. All right, guys, and by the way, guys, let me just say this. I sincerely hope that I am wrong about my expectation for a potential bear market. Because, as you know, for most of this year, I've been bullish on the markets. I don't want the market to collapse into a bear market. I would much prefer my original thesis to be right. But if it's looking quite likely we're in a bear market, then I want to have some protection against that for risk management purposes, as I said earlier. By the way, guys, if you haven't seen my previous video with Charlie Burton, make sure you go ahead and see that, because in that video we explained some of the dangers, some of the risks that face traders in a bear market. So in that video with Charlie Burton, we talked about potential mistakes people make, likely dangers, and some strategies which could be very helpful and useful to you. All right, guys, if you haven't seen that video, make sure you go ahead and see it. I'll put the link for it in the description. And by the way, guys, make sure you check out my members video too, because in the members video, we're going to go into much more detail with wave counts in the stock markets, and also we'll have a look at Bitcoin and gold as well. And if you're not a member, you can join in that link you see right there. Thank you very much indeed, guys. Bye for now. Cheers.